see everybody. All right. We're good. Yep, we're on. We're good. We're good. All right.
I'm ready anytime.
Yep.
Okay. 3, 2, 1.
Hey folks, welcome back to your Frederick Real Estate Update. I am Darren Ahern with RE/MAX Results, bringing you over 21 years experience in the Maryland and PA region. And I also have with me the man, the myth, the legend over here, my wingman, with all the money in the vault, Mr.
Terry Kernan.
How's everything over at Presidential Bank Mortgage?
Everything's awesome. Things are starting to heat up. But first, I got to give a shout out to our son, Mary Susan and I. Last weekend, our son Joey got married to our new daughter-in-law, Molly Kingan. She's now Molly Kernan. Congratulations. It was an incredible wedding down in Norfolk.
Nice.
250 friends and family, and it was amazing. But best wishes out to Joey and Molly.
There you go. That's the fun
Incredible.
side.
Yeah,
a lot of
that's
fun.
a great side.
Happy, aren't you?
And what was great was leading up to the wedding, the phone wasn't ringing, but since the wedding, the phone's been ringing.
I gave you time to do and help and do
Gave me
all
time
things
to
you need to do, and
get
now it's
past the
mayhem.
wedding, and now things are starting to ring. Things are looking great, and it's not so much about the purchases. We know that that's still slow. People are still on the sidelines, but I'm starting to get all the calls with what's going on with the rates. I want to refinance. Let's get in line. Let's get the ball rolling. So things have picked up tremendously in the last week, and looking forward to the next 12 months of much of the same, I believe.
Yeah, good. We'll do the numbers, and we're going to get right into that. Make sure everybody drops down into the WFMD.com. Go into our programming on there. You'll see on the very bottom your Frederick Real Estate Update, and you'll get back, be able to see 375th program today. And make sure you go back a couple weeks ago and you'll check out Kenny McLean, our appraiser, some of his updates and ideas and all the rest. Because we are tackling, Terry, the 22 biggest questions we ever hear practically in real estate and mortgages and renting and buying and selling and all of it. And that's why we love doing this. And plus, we add in a sprinkle of what you guys share that we hear on the streets, experience on the streets, and what we feel is going to be happening. So, Terry and I, like you said, we have 21 years in this. Terry, you got 30 years or whatever plus mortgages. So you got well over 50 years of experience sitting right here with thousands of transactions and all kinds of experience. So, Terry, let's get into numbers. Check it out for September 14. Now we have coming soon 67 homes coming up on the market.
Okay. Up there.
I got one of those coming up, and we have 400. We haven't been here in a while. Active homes on the market, 422. So we did crest that 400 mark, and we're heading towards the 500. We're definitely seeing more inventory. My buyers are excited to see definitely more homes out there. Sellers aren't liking it because obviously values have bottomed out, boys and girls. We are totally flat. There's really hardly any of the markets we're seeing price segments in general, unless it's 250 and under, which is nothing for sale, practically but a condo. That we're seeing, prices going up. So we're up good. We're up 8% or more for the year so far. And like Kenny had said, our appraiser that's very well seasoned in this area, if we end up at 9% like last year by December 31, we are thrilled to death. We saw no crash. We saw nothing bad happening then. And we will call it an amazing, crazy good year for sellers that sold and all that. So 422 is where it's at. Resale, 317 homes, 48 days on the market. Terry, we're up to. We're almost at 50.
Okay. It's climbing.
It's climbing. Every single week practically, or every 2 weeks, we are seeing days on market go up and up and up, which means it's taking longer for sellers to sell because most sellers are in denial. And I am going to talk about that just for a moment because I just dealt with it this last week. So 540 median price, 648 average. Single family homes resale, 205 of them. 57 days on the market at 629 medium and 761 average. Resale condo townhouses, 112 of those for sale with 32 average days on the market. 425 median price and the average of 442 is the average. And the new construction, 105 of those. 55 are single family homes at 800,000 median, and townhouses, 50 of those at 511. So there it is. That's proof right there. We see things flat. These numbers, Terry, have not changed, it feels like, in 3 or 4 months at all. Even though buyer demand came down a little bit, it's just, we're still holding its own, if you will, really. Under contract, 464 homes, 177 brand new, 287 resales at 22 days average market with a median average of 450 and an average price of 515. The brand new single family homes under contract, 62 of those with a median price of 733 and an average of 792. So that is down just slightly though. Townhouses, 115 of them, 470 with an average now at 483. So the median's 470, the average price 483 on a brand new townhouse. So sold in the past 30 days, 335 of them, 275 a resale with an average time of 18 days on the market with a median price of 475 and an average of 531. Single family homes in the last 30 days sold would have been 145 of those. And I'm sorry, 145 total. And then out of those, we had 20 days on the market on resales, 145 resales, 649, and then an average of 460 brand new homes, 19 brand new single family homes, and that average was 748 with 41 townhouses at 503. So we're definitely seeing these townhouses that are brand new builds just crest above $500,000 on the ones we just saw.
That's crazy.
Yeah, so if you ever thought in a million years you'd see a a townhouse, brand new build with all the bells and whistles at $500,000 in Frederick, we now have that. List to sold price ratio is 99.9.
Okay.
So that's come down just a hairball. So, all right, Terry, let's get into it. Rates, what in the world's going on? Besides, they've been coming down a little bit, but I just still think a lot of buyers think it's coming to 5% or below. What do you think's going to happen? Where are we at?
So I talk about momentum. The momentum is still working in our favor. Let's talk about the big week that we just had. Consumer Price Index came in at 0.2%. Producer Price Index came in at 0.2%. Those were numbers that we were expecting to have. So what does that mean is that year over year, inflation is running at 2.5%. That's inching towards coming down slowly, but that's inching towards what the Fed needs to see to get monetary policy back. Now, what does that mean? As we get closer to that inflation number, the Fed are going to have to start cutting interest rates. When is that going to start? People say this coming week.
Yep.
Okay. Fed's meeting. They're going to be cutting. Everybody is saying a quarter point. I'm holding out for a half a point. And here's why I'm holding out for a half a point. Quarter point really is just going to signify the start of rates coming down. Okay. That's all it's going to do. It's not going to affect people's interest rate. It's really not going to make a difference anywhere. All it's going to do is say, yes, we are starting to cut. What I am afraid that they're doing is they're not addressing the jobs market, okay? They have to make a little bigger cut, in my opinion, and I hope Jay's listening to this. Chairman Powell, I hope you're listening, because I think that a half a point cut is going to let people know that we're actually taking this jobs thing seriously. And if you do a half a point, it's going to make a little bit bigger of a dent in what's going to happen. Now, my prediction, as well as many others, is that you're going to have basically a full 1 point cut in the next 3 meetings. Okay, so if they do a 0.25% today and a 0.25% next time they meet, they're going to probably do a half to wind up the year. My thing is, why don't you start with a half, get the momentum going a little better, and kind of get ahead of this jobs thing. A lot of signs that we're seeing, and I can get into them, and I can bore everybody with this economic stuff that I actually like, being an econ major, not the most glamorous, but what we're taking a look at is a lot of signs are pointing to recession level numbers, okay?
Yeah.
Things that are flat, things that are, unemployment rising. These are pointing to a recession that I think that we have to stay ahead of. But right now, expect a 0.25. If you hear that they cut 0.5%, it's probably because Chairman Powell listened to the show.
Yeah,
Okay?
that's right.
That's my guess.
We'll be talking about it next week to say thanks, Jay.
Yeah.
Or, hey, did you miss?
Yes. So, but that's just my 2 cents, and I think that things are moving in the right direction. And then we can talk a little later about when to refinance and stuff like that. But that's kind of what's going on. And what I said earlier is I'm starting to see people. We're starting to get people lined up to refinance, and it's all going to depend on what makes the most sense to you, and we can chat.
Yeah, let's talk about that. Rates, I know conventionally 6.15, 6.2, bouncing around in those areas for conventional with great credit. And we're going to talk about that because that's one of the big questions that buyers ask. That's huge. This is probably the biggest question when it comes to getting a mortgage. FHA is what, like 5.70 along with VA and all that. So
Yes, so FHA's in the fives, VA's in the fives,
Yep.
USDA fives, conventionals in the 6.25 range.
Yep.
All depends on your situation. All depends on your loan to value. Is going to affect your rate. All depends on your credit, where the rate will fluctuate.
Yeah, keep in mind, Terry, that like people have to understand rates got above 8% for a little while there. And so in retrospect to that, the rates today are the lowest they've been in over a year.
Yes. So last year at this time, rates shot up, and they shot up very fast.
Yep.
And a lot of people were caught off guard. I've got people that I'm reaching out to. I've got people that are reaching out to me. We're getting everything lined up. So here's kind of what to take a look at. If gas prices continue to come down, right? A barrel of oil right now is at $72. Just in July, it was $86. That's a substantial drop. You're starting to see the pumps. I've always kept an eye on gas prices as what's going to happen with rates. So if gas prices continue to come down, we're going to see rates continue to come down. That's just me. But we're seeing a huge improvement in that. We're also seeing a huge improvement in the 10-year bond. So let's talk about when is the right time to refinance. Is that what you want to talk about now?
Yeah, that's what I guess people are, like you said, like people don't know, like, okay, if I got in, I bought a house a year ago and it was 7% or 7.25 or whatever, 7.5. How do I know when it's a good time to refinance? Like, how much do rates have to come down before it's worth my while, and how much does it cost to refinance?
First question you got to ask yourself is, how long are we going to be in this house?
Yep.
Number one question I ask everybody when they call is, I want to refinance. First thing I say is, okay, let's talk about what is your current rate. Okay, your current rate's 7.5. Right now we're in this, let's say 6.375% range. So that's over a full percentage point. Let's say on average your loan is $400,000. Okay, that's pretty much the average loan amount. Right now at 7.5%, you're paying $2,796. For all intents and purposes, you're paying $2,800 a month in principal and interest. In today's market, if you did 6.375, if you let it go a little lower, that number is going to change. But I wanted to use this number to give you a good solid idea. On a $400,000 loan at 6.375, we're looking at $2,495. So for all intents and purposes, it's $300 difference, and $2,800 versus $2,500 a month. Huge difference. $300 a month, $3,600 a year. So the question is, how long are you going to be in your house?
Yeah.
If they say 1 year, then what I'm going to say is, you know what, I would love to refinance you, but it's going to cost about $3,600, possibly $4,000, depending on escrows and everything else. But the actual closing cost rates are going to be about $3,000 to $3,600 on an average refinance, and that is usually financed into your new mortgage, so you don't take it out of your pocket.
Okay.
So the net costs on a refinance, let's say, are $3,600. In this situation, if you're moving out in a year, it doesn't make sense
No, you're not saving enough
to
monthly.
refinance. You're not saving enough monthly. If you say, well, we're going to be gone in 2 years, we're going to downsize in 2 years, then it's going to cost you about $3,600 to refinance. and you're saving $300 a month. So your break-even point's 1 year. What we look for is, let's keep that break-even point. The cost to refinance divided by the cost of the savings each month. So in this case, it's very clear. $3,600 to refi, $300 a month savings. It's a 12-month break-even. That's the number that I first come up with to talk to the borrowers and say, and there's a lot of guys and girls and people out there that are going to be doing refinances, and they don't care about your break-even point.
That's right.
They really
exactly
don't.
Yeah.
They don't care how much it's going to cost you. They're just trying to get refinances, and that's what you got to be very, very, very careful of. We talk about break-even point. We talk about where you're going to be in the future, but that's about what it looks like on an average loan. $400,000, 7.5%, dropping 1%. If you drop 1% on a $400,000 loan, the numbers are going to be very, very similar no matter where you drop. So the farther you drop, the shorter the recovery. But if I say to somebody, hey, I can recover your money in a year, and if in 18 months rates are lower, we can always do this again if it makes sense.
Yeah.
But I've got somebody that, right now he called me and said, hey, last year I bought when rates were rising. I want out of my loan right now. I want out now, and then we'll refinance later, but I just want to get out of that payment right now. I said, fine, totally understand. His recovery is going to be about a year. This is the scenario that I'm running for him right now. So this is what we're taking a look at, and that's about how long it takes.
Okay. That's good. That's why
Did I explain that? Okay.
Perfect. That's
Okay.
why, guys, give Terry a call. He'll run it for free, right? No obligation.
No obligation.
Be able to work out scenarios and educate you and make a tailored kind of a proposal that's going to give you options to figure out what can I expect? Where do things go? And of course, and the big thing is, Terry, a lot of people just thinking interest rates going to keep coming down, 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 down. At some point, they're not going to come down anymore. Let's be honest. We're going to hit a bottom where it's like, all right, this is where we're going to live. Me personally, I think it'd be great if we got to 5, but I don't think our economy can handle it. I just don't. I think we're there. I think we're right where, right around 6 just seems to be, keeping the seesaw nice and level, if you will, and nothing crazy, but who knows?
Well, let me remind people that in the last 50 years,
let's remind them of reality.
50 in the last 50 years.
Yep.
The average interest rate has been 7.6%.
There you go.
Okay.
7.6 over 50 years.
Over 50
We're
years.
under the average of 50 years of mortgages.
Correct.
But it doesn't feel like it because of what we've experienced for so long,
Since
where we come
2008.
to, and especially because of what monthly mortgage payments are in retrospect to people's incomes. And that is true. Affordability, I've been saying it. I know it sounds terrible, but hey, we, Terry, in a perfect world, we need values in our area to come down 20%, and we need interest rates to probably be at 5. If we could see those two things happen, wow, we would see the affordability factor versus people's average incomes and salaries start to level out to be more, you wouldn't have people at 45, 50% of their income going to housing. It'd be back down in the 30% range or whatever. Am I right?
Yes. And I'm going to throw out one number, and this number sounds like a lot.
Go ahead.
Okay?
Yeah.
32 trillion, and we're not talking about the national debt because that's higher than 32 trillion. $32 trillion right now is what we as Americans have in equity in our homes combined.
It's the highest ever.
Highest ever.
Craziest.
I'm going to basically say that a year from now,
Okay.
that number is going to be the same or less. And people are going to say, does that mean that our house is going to depreciate? And the answer is no. Houses will not depreciate. But here's what we're going to see in the next year,
Okay.
in the next 18 months, is as rates come down, people are going to refinance and they're going to take money out
That's
of
it.
their house
Yep, to pay
Okay.
debts and to live.
to
Yep.
pay off these credit card debts that are now $1.3 trillion
Jeez, oh,
in
flip.
credit card debts.
We were at 1 not long ago, and we're at 1.3.
Yes.
This is nuts.
Yeah. So that 32 trillion, all-time high, great news. The reason it's at an all-time high is because nobody's been able to take cash out or has been willing to take cash out of their home. in the last 2 to 3 years because the interest rates have been going up.
Yeah.
So look for that number to stay steady, but probably to come down
Come
with
down
the
a little
amount
bit.
of cash out refinances
Yeah.
we're going to see over the next.
Year or two.
Year.
Yeah, I think we're going to see more people cash out to pay off
But that's
debts
an
and things.
amazing amount.
That is. That's just incredible when you, especially if we go back to say 2000 and a height of 2007 or 8 of the market, it would be interesting to see. Obviously, the population was very different. The amount of homes that get built. I mean, good God, if we do almost 1 million homes a year, since 2008, we've added 16, 20 million homes in this country that didn't exist back then, let alone the population of it. So if we take those numbers, it'd be really interesting on a scale of percentage to see what that would have been like today's numbers for back then, which would make sense for today. But anyways, all right, let me talk about life on the streets, Terry.
Okay.
Thanks for sharing that. Yeah, Terry. Just had a massive appraisal issue. I mean, big. We're talking $40,000 big. And my sellers love me. They think I'm the coolest thing since, Mr. Powell that listens in. Yeah, but they're not coming down. No, these buyers are going to have to figure out. They're putting a lot of money down, and they're just going to have to probably figure out, bring you more money, more reserves, or change your loan details. We don't care what you do. I know I'm right. This is one time I stood my ground and said, nope, I know I'm right, and we're going to win this match. And but that's pretty crazy. I can understand like a $5,000 or $10,000 one. There's a lack of data. We did a cost approach, and we had 17 showings on this place in 4 days. So I know my numbers. I've done this 21 years, and this is one time I'll fight to the mat on the floor and say no. I know my numbers. I'll win on this one. And if not, then we'll get another buyer that will pay it. I guarantee it. We're not too high.
So just so we're clear,
This isn't a high-end price range,
Okay,
though. So
what's
I'll
the
give you
sales
a
price?
number. Yeah, we're not talking like, holy cow, we had a 15 or 10% appraisal differentiation.
Okay.
We're talking 7%, which is still pretty high.
Okay.
I'm
That's
not
fine.
off in my numbers in real estate by 7%. It's been a really long time since I've had that happen to where, and by the way, we're not on the low end, like, oh no, I messed up for my sellers. No, my sellers, like I said, they love me. They're just like, holy crap, you got us more what the appraiser says by 7%. I'm like, no, because your number's right. And I know we're right. So I'm going to get off that soapbox. I don't hate appraisers. Candy McLean, all the appraisers know I don't hate them. You can do whatever the heck you want. But in my definition, I'm always going to go back to willing buyer, willing seller. If both agree on a value and one's willing to pay it and they're able to pay it and they have the means to pay it, that's the fair market value. End of the story. You can do whatever you want with your appraisers and your lenders. I mean, your underwriters and all your other, systems and all those kind of things like that about your risk assessments and things. That's fine. I get why they exist. I don't dispute that whatsoever. But buyers and sellers dictate the market above everything else, and that's how it comes down to. So,
Okay.
all right. So that I just dealt with that, and we're gonna get through it. Not a big deal. It's fine. And then for the seller side, sellers, you need to understand this. The market has shifted a little bit. Buyer demand has come down quite a bit. You can get mad all you want. I don't really care. It is what it is. I just had a seller recently, I went to listing and they're now coming back saying, well, this agent told us we'd get $50,000 more. Great. Go ahead and hire them. Put it on the market. And in 10 days when you don't get it, give me a call and we'll do it right. I want them to spend their money, time, and make them take their sign out of the yard because you got told something that's not legit and real. So I told people if I can get you $50,000 more than the papers and what it says, oh, by the way, you will have an appraisal issue. You'll be dealing with that. But if I could get you that much more, well, of course I would do it. Why wouldn't I? I want you to make more money. I make more money. It works out great for everybody. But I also know if you miss this market and you overprice it, no matter what market you're in, you're doing yourself a massive injustice and you're going to be mad. Things are changing, Terry.
So let's go back to, and this is a question I have, but I think a lot of people out there will probably say, yeah, that's a good question. Is if you put your house on the market in this changing market and you, as they say, missed the boat.
Yep.
Okay.
Yeah, you'll be mad.
And let's say you take it off the market because you feel you missed the boat. When can you put it back on the market to where it doesn't show that you put it on 2 months earlier, 4 months earlier, Or can I just say, hey, I'm just gonna take it off the market and I'm gonna put it back on March 1st or whatever? Does that show up? How does that
Yep,
work?
that's great. Well, it used to be you could take it off the market in 60 days. Zillow didn't even recognize it, and all these third-party valuation companies out there didn't even recognize it. And about 8 or 10 years ago, those changed. And now, I don't care if you take it off a week or 10 years and put it back on, the whole public is going to know what you did.
Okay.
It's never going to
that's really
change.
good to know.
You can't erase the data, boys and girls. So that's another reason why shoot yourself in the foot, because now the whole market's going to be like, well, what are they doing out there? It's all public information. You can't hide nothing. So it doesn't show up as like, now it's starting over, no days on market. No, it picks up where you left off at some given point, but it just shows. It shows it's stigmatized. It shows that you as a seller missed the market and you had an agent that didn't represent you the best possible way with the most truth and guide you ethically in such a way that makes sense to the whole market and stuff like that. But when in doubt, hey, I'll get all the naysayers out there. You ready? If I don't feel comfortable with something, I have no problem saying, hey, look, I'll pay for your appraisal. At settlement, take it out of my my compensation, $500-$800. I don't care. I really don't care. Let's get it professionally appraised. You pay for it. Let's get that number back and let's see what that looks like. And by the way, this particular home I'm dealing with, the Zillow was below $20,000 than what I thought. So I don't care what Zillow says. I'm not mad at Zillow, but Zillow isn't God. All these third-party vendors don't know values like I do because we're boots on the ground and we're not using an algorithm. Now, AI might make things a little more accurate in time. I don't know. I don't really care. But they don't know the condition of your house. Your condition matters. Hello, condition matters. It can be 10 to 15% of your value based on condition. Easily, Terry. 10%. $500,000 home, your condition of your home could affect your value up or down by 50 grand, just like that. You don't believe me? Go ahead and put a roof on and see what happens. Go ahead and have a furnace that's 30 years old. Go ahead and have a kitchen that's 30 years outdated and bathroom. See what happens. Yeah, it's going to cost you like you can't imagine, okay? And especially in the entitlement world today of buyers that say, I want turnkey, I want everything brand new. So that's what we're experiencing. And yes, we are seeing values in certain areas come down just a tiny bit. But who cares? If it comes down 3%, you came up 40% in the last 40 years. Really? That's a problem? Not at all. We have 1 minute left, Terry. Here's the last thing I'm going to ask you today for the program. What is the average credit score I need to qualify for a mortgage?
So you can get a home with an FHA as low as 580 credit scores right now.
Okay.
Okay. There are some people that will advertise lower. It's just so difficult. But 580 is probably the lowest. But you're going to be in an FHA loan for 580 all the way to probably 700. Once you get above 700, you've got the conventional loan that's going to give you a pretty fair price. You can go down to 620 on a conventional loan, but the interest rate's going to be through the roof.
Yeah, that's the
Instead
big
of
thing.
6.25, you're going to be at
Over 7.
7.75. So
Wow.
you don't
Wow.
want to go there.
Wow.
You don't get dinged on an FHA loan as bad for credit issues.
Yep.
But yes, you know, and we can work with your credit. We can raise it, but very easily. You just gotta, don't believe you can't buy a house because you don't have great credit.
There you go. All right, folks. Thanks for tuning in to your Frederick Real Estate Update. Terry and I will be here next Saturday. Have a great weekend and happy buying and selling. Take care. Thanks, guys.